This is July 22nd, and this is the August issue of the Andrews Pitchfork Newsletter. And just so we get the commercials out of the way, this is in connection with andrewscourse.com. So if you're seeing this for the first time and you'd like to get more information, come to this site. One of the things you can do is press new, enter your email address here, and you'll be getting emails every once in a while from Yahoo that show some of the discussions in our group. All right. So anyway, let's get back to what it says in the newsletter. Right now we're in a Fed energized market, as everybody knows, and things are going up, up, up. So the question is, how far and where might it go? Well, looking something simple like the ES. I do this on the fly, so PY. Here's SPY. Okay, here's the ES. ES, SPY, SPX, pretty much the same thing. And what we're looking at is the market obviously going up here, going up very nicely. And the next area that we're watching is right near the end of this week. In the ES, somewhere in the 1720 to 40 area, okay, depending on what the market does here. And so we'll be watching that area here towards the end of this week. That's what we're keeping our eye on. But there are specific stocks that we've talked about this month that are kind of neat, and we'll look at. Towards the end of last month, we put up this chart and said, gee, it's got to come down and beat those lows here, and sure enough it did, and this was and it did. And then I wrote up this thing about a bank that pays 4%, and we all know that there is no bank in the USA or Canada that really pays 4% in terms of a secured guaranteed account, but this one here is one that pays 4% in terms of the dividend, or did if you bought it down here like we did. And since then, the market has been very cooperative in this stock here and has been going up nicely. So that's so much for the bank that pays 4%. Another stock that has been the focus in the last month, and I'm sitting on the short side, is this one here, and this is Hewlett Packard Company. So I guess we'll get to see how this one does over time. Looking at this one going down for a while. Otherwise, there's a risk of loss, as there is in any of this stuff, and that would mean closing at new highs would probably mean that it's over. Let's take a look at ATW. This one came to my attention this week, and this is mainly because if you look at the reaction lines, just take some time and draw your reaction lines with this one, and you'll find that this one has been just really a really nice dance partner, so to speak, and the high here was perfectly at a reaction line according to the charts I sent out this weekend, and then the lows in here were also right at reaction lines, so just really beautifully. And this one's got a good probability, due to that fact and other factors, of making a nice reversal here and going down. This is a company that's in the drilling business, so I hope nothing goes wrong in their drilling business. Other stocks that brought to everybody's attention in the last month rather, are ones we're going to feature in a little bit. Let's take a look. What does it say next on here? TD, ATW, HPQ. Okay. The other thing that, when it comes to trading, some people really like to avoid it. I understand that. So what we're working on is what we call the La Jolla portfolio. And believe it or not, the guy who's working on this is in La Jolla, right around the corner from Del Mar Racetrack. So let's take a look at this. basically what he does is he has this group of stocks that he looks at, and these are really ETFs, exchange traded funds. And right now, the La Jolla model is long these five and short these two. Okay, and and this is how it's performed since the beginning of May. And what we look at is not just that it's making money. What we're out to do is out to outperform the S&P in both ways. Meaning that, for example, when the S&P went up during this time period here initially, the the S&P was up about half of what this portfolio was up. And when the S&P went down 8% roughly during this time period, this portfolio was down less than 3%. So we're really looking at outperforming the S&P in both ways, right? In less pain and more gain, basically. And so this is where we're at right now. This particular approach of using longs and shorts together at the same time is something that is supposed to minimize or eliminate a little bit of market risk. And so at any given time, like right now, for example, this one is short about a little over $50,000 worth of stock, 51,000 to be exact, and long 142. Okay, so we'll see how this works out over time. Okay. Okay. Let's see what else we have here. Going back to the newsletter. Gold, 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 gold. Here we go. Now, in the wonderful world of gold, on July 9th, we sent out a letter to the Andrews Group letting them know that the stocks that we are long, that are gold stocks, are kind of priced like options, you know, and one of them is NG, and so around here somewhere is when we bought the NG, okay, which is Navigold, and it's up a little bit since then. It even went down to a better price than where we got in. Okay, and the other one is SVM, and this one we got, we sent out our little blurb on it around the 9th, which was about over here, and people could have probably gotten in the next day at the same or better price than we did, and it's been going up a bit since then. Okay. In addition to that, we are also long Seabridge, okay, which is not priced like a couple of bucks. It's about $10. We bought it somewhere around over here, around $9. And the other one is EBR. Now, EBR is another little cheapie, and this one is also priced like an option, just a couple of bucks. But what it is it's the electric company in Brazil. Now, there's a lot of controversy regarding the electricity in Brazil and the socialistic government and all that kind of stuff. And maybe that's the reason why this thing has tanked so incredibly. Remember, right up here is in the high 20s, in the about $24 a share, and down here it's about $2. So anyway, we had a signal on this, and we're sitting on this, and if things go well in this stock, we might get one heck of a long-term capital gain out of it. So much for that. Yes, here we go. In October, we'll be offering a live seminar in San Diego. And in addition to actually, that's not a regular seminar, it's a kind of a course get-together where course members get together and they ask questions and they present some of the things that they've been doing and all those fun kind of things. also having a special seminar that is what we call a Babson Pro, and Babson Pro is one that as a basis utilizes the philosophy of Roger Babson. And what that specifically means is Roger Babson looks to enter the market at or near um, points where a center line can be drawn. So, what does that mean in English? That means at a good chance of something being a top or bottom. Okay, and he really stresses having patience. If you read his autobiography, he talks about having the patience to wait for this kind of thing. Okay, and so we're looking at using the course methods, what specific signals Roger Babson would be looking at for that if he was alive today. And so that's what we focus on. Okay, in the Babson Pro seminar, and one of them is going to be the what we call the SB technique, also known as sandbar. It's been around a very long time. Those of you that have been involved in this for a while will probably remember that we had a oh god sandbar signal all kinds of places along the way, like over here, and I don't remember if it was over here or over here, but it could have been, and it could have been both. But it's just incredible. And the problem with using this is that if you like to trade a lot, is that you don't get a whole lot of trades using that. But what you can do if your person likes to trade a lot is you can use this as a very strong trend indicator, so to speak, and then utilize the Andrews methods for getting in with that very long-term trend. Okay. But anyway, the Babson techniques are kind of neat. So we'll be doing that, and let's see what else is in the newsletter. Here we go. Oh, by the way, in order to take the Babson Pro program, you have to already have as a basis the Andrews course and the expanded Andrews course. So there is a limit to the number of people who can take the Babson Pro program because the expanded Andrews course is only open to a total of 100 people, and we do have a limitation on that in that there are a maximum of 3 that are offered on a monthly basis in the Andrews expanded course. We limit that to 3, and of course it is the expanded course that has the OR indicator, and that is the special indicator that Andrews discussed in his 1974 newsletters. Also, the expanded course is fantastic. You can see some of the material from the expanded course online. The and these because the expanded course has as a big part of it these 3 substantial manuals that go over all the written material that we have from Alan Andrews, in addition to new videos that we've done. But we also include just lots and lots of, well, everything we have. These are copies of everything we have from Andrews, and that's the way it is. Okay, let's moving on to bonds. Bonds climbing up ever so slowly as I write this. And this is, and I do suggest at this time it is a very good idea to draw some course lines and keep your eyes open for a sell signal. Then we move on to the forex, and when it comes to the dollar, that's just been like a yo-yo. And right now with the strong uptrend in the euro and the British pound, the dollar itself, the dollar index, continues to move down. We did find something very interesting when it comes to forex the other day, and that was last night in CHFJPY, and a really good close look at that is really warranted because that one has the potential to go down to down about 5%. Okay, so going down to this area here. Right now it's here, and going down to this area here would not surprise me at all. Okay, so those are some. That's something to look at. Oh, and one other. Here's something that's very, very new. Um, Software for the iPod. Now, for new course members who would like to draw the lines with their fingers, when you have one of those iPods or tablets or iPhones, you use your fingers for this stuff rather than a mouse. Well, you can do this with an iPod, tablet, or iPhone. There is a bonus of new software that is available for that particular product. We give it to you as a bonus when you take the course, and basically what it is we have a company that we found that is located in California that has developed software for this, and it is one of the few products that allows you to draw the action reaction lines in addition to the median lines, um, and do them in what I call a flex methodology, which is really neat. This flex methodology is also available to you if you use software like eSignal. Okay, and if you use course software like eSignal, just contact me. Or if you're thinking about using eSignal or Quote.com, contact me. I will give you the name of a certain salesperson to deal with over there, and that person will make available to you a a way to get a really, really nice discount on your data. And while you're paying, well, yeah, actually, it's exchange fees. You still pay Signal the same amount for your data, but because that's where they make their money. But on the exchange fees, you can virtually eliminate a lot of them, and that is really nice. So anyway, please contact me for the expanded course or any of the other things from us, and I guess we'll see you next month. Bye.